Hey guys, hope you are all well today. Tonight I want to go over a couple quick things that many have requested I speak on, in particular with the news regarding more potential concerts coming to AMC. In case you don't know, there's an upcoming film inspired by Beyoncé's immensely successful Renaissance World Tour that is in advanced discussions for exclusive distribution through AMC theaters, according to sources familiar with the project. The talent agency CAA initiated initial discussions with major film studios and streaming platforms approximately 2 weeks ago, urging them to be prepared to bid on a project that the iconic singer-songwriter has been meticulously crafting over several years. This project promises to encapsulate various elements, including highlights from her record-breaking 2023 live performances during the Renaissance World Tour, segments from the long-anticipated visual album Renaissance, and a behind-the-scenes documentary-style account of the album's creation and the tour's development, with potential appearances by Blue Ivy Carter. Insiders have indicated that the film is targeting a wide release on December 1st. It is anticipated that by the end of the Renaissance World Tour, the film could contribute significantly to the tour's total earnings, which are projected to approach a remarkable $560 million in ticket sales. This development involving Beyoncé follows in the footsteps of a similar deal brokered by Taylor Swift, who is set to release a straightforward concert film based on her widely attended Eras Tour. Reports suggest that Swift's terms for the project are highly favorable, as she self-financed it and is expected to receive more than half of the box office revenue. Beyoncé's arrangement mirrors this, offering her a similar share of over 50% of the film's global earnings, according to an insider. Industry experts are closely monitoring Swift's AMC venture, which is anticipated to generate upwards of $100 million in revenue when it opens in October. The numbers speak for themselves. This could be a very profitable venture for AMC, and one that I think the company should now continue to try to emulate with many other artists and talents. This can quite literally only help AMC, especially if these films come out during the fall and winter seasons when theaters don't get as much foot traffic as they do during summers. I also think that, because of the huge popularity of Taylor Swift and Beyoncé, along many other potential artists, AMC should also strive to show their performances every couple years. That way they can count on repeated revenue coming. This is a pretty significant development and one that I think can definitely help AMC enhance their revenue streams. The next thing I want to talk about is in regards to the big antitrust case between the United States versus Google. I know I haven't really talked about this a lot recently, but I think it's incredibly interesting and something worthy of discussion because however the ruling comes out at the end of this case, could have a huge change in not only Google, but tech in general. But before we start, let me quickly shout out my Discord. If you are looking for a great trading community with a high success rate, come check us out. We have the most dynamic and profitable day trading community on the internet. If you're interested in building wealth and mastering the art of day trading, you're in the right place. Our Discord is home to a team of experienced and successful day traders who are ready to share their knowledge with you. With years of combined experience, our experts will guide you through the ups and downs of the market, helping you make informed decisions. A ton of content is open free for everyone to participate and the Discord is free to join. The link will be down in the description. Now let's begin. So like I said, I have been following this antitrust case very closely, and I will be citing the Verge article, which goes in precise detail over the proceedings of the case, so shout out to them because I'm going to be borrowing from their articles today. Today the court brought Microsoft's CEO Satya Nadella to testify in the packed Washington, D.C. courtrooms. Led by Adam Sievert, the questioning commenced, with Sievert simply seeking an explanation from Nadella regarding why Microsoft was interested in competing with Google. Nadella's response was succinct: money. Nadella said he sees search as the largest software category out there by far, and that he used to think of Windows and Office as attractive businesses until he saw search. Nadella clarified that Bing didn't need to dominate the market entirely to be lucrative, emphasizing that Bing was already a profitable venture for Microsoft. It's important to note that in a lighthearted exchange, Google's lead counsel, John Schmidtlein, expressed a desire for his law firm to count marginally profitable in the billions of dollars, to which Nadella humorously replied, "You should get into the search business." Sievert's inquiries delved into Google's billion-dollar exclusive search deal with Apple and what it would mean for Microsoft if they secured such an arrangement instead. Nadella acknowledged that this would be a game-changer, even asserting that Microsoft was willing to offer Apple the full financial benefits of the deal if they switched to Bing. He suggested that Microsoft was prepared to incur losses of up to $15 billion annually for this endeavor. Nadella even expressed a willingness to conceal the Bing brand in Apple users' search engines and respect Apple's privacy preferences in pursuit of obtaining more data, emphasizing the importance of controlling default settings in altering user behavior. Nadella clarified that, for Microsoft, becoming Apple's default search engine wasn't solely about money but rather about expanding distribution and increasing query flow for Bing. This would create a virtuous cycle for the search engine, driving user engagement, data collection, advertiser interest, and overall improvement. Conversely, if Bing remained in a disadvantaged position without the queries, data, advertisers, or users, it would perpetuate a vicious cycle. When asked whether Microsoft had attempted to become Apple's default search engine, Nadella confirmed they had, but the results were unfavorable. He noted that not only were the economics of the Google and Apple deal highly favorable for Apple, but there were also concerns that Google might leverage its popular services like Gmail and YouTube to promote Chrome aggressively, diverting users away from the Safari browser. According to Nadella, this apprehension kept Apple and Google in a close partnership. Both Sievert and Judge Mehta inquired about the impact of artificial intelligence on the search market, with specific reference to Microsoft's collaboration with OpenAI, which transformed Bing's functionality. Nadella tempered his earlier statement about making Google dance, stating that it was perhaps an expression of enthusiasm for a company with only a 3% market share. Nadella emphasized that while AI had the potential to disrupt the market, it could also further solidify Google's dominance. As AI systems increasingly rely on data ingestion from websites, publishers and platforms may opt for exclusive data sharing deals with Google, rendering other search engines irrelevant. This raised concerns about the future availability of publicly accessible data. Publishers with existing Google deals have reportedly approached Bing to match their arrangements. Nadella's narrative aligned with the challenges faced by other emerging search engines. Google's default status makes competition exceedingly difficult by limiting access to users and vital data. During Google's cross-examination of Nadella, Schmidtlein presented a different perspective, contending that Bing's inferiority was attributable to Microsoft's mismanagement of its search and mobile products over 2 decades. Schmidtlein pointed out Microsoft's failures, from MSN search to the difficulties with Internet Explorer, Windows Phone's lackluster performance, and the convoluted rebranding of search products. In each instance, Schmidtlein argued, Google outperformed and out-invested Microsoft. The bundling of Bing and Edge into Windows was a recurring point of contention. Schmidtlein highlighted that despite this bundling, Chrome and Google Search remained more popular among Windows users. He asserted that this indicated defaults didn't significantly influence user choices. Nadella and the DOJ countered that Bing's market share on Windows, though modest, demonstrated the effectiveness of defaults in shaping user behavior. Nadella consistently maintained that defaults played a pivotal role, emphasizing that users rarely switched search engines. He cited Apple Maps as an example of the power of defaults, even though it initially faced challenges. The power of defaults emerged as a central theme in the US versus Google case, and the question of which side Judge Mehta aligns with could define the trial's outcome. Towards the end of his testimony, Nadella engaged in a discussion with Schmidtlein regarding the size and competitiveness of the search engine market. They debated the relevance of vertical search engines, competition with Amazon and Facebook for search ads, and the shifting behavior of users away from general search engines. Nadella downplayed the significance of these factors, expressing disinterest in competing with platforms like TikTok, which marked a contrast to Microsoft's previous interest in acquiring TikTok. The power of defaults remained a pivotal issue, with Nadella asserting that defaults were the ultimate determining factor in user behavior. This ongoing debate will likely continue to shape the trial's trajectory, and I will continue covering the most important tidbits, but I want to stress on the most important blows to Google that I think they will struggle overcoming later on. First and foremost, props to the Google lawyer for trying to make the case that Google's dominance through Google has been because competitors, in this case Microsoft, failed to make a worthy competitor, with a long streak of failures, whereas Google's success was mostly driven by the quality of their products and services, which are unparalleled. Unfortunately, I think the lawyer made a huge mistake in this part, because it positioned Microsoft and the United States government to gain leverage in the conversation. As explained, for a search engine to be successful, it needs users. The smaller the user base, the lower the ability for potential competitors to improve their search engine and in essence grow it. You see, the better the engine, the less people will opt out to use another, and that's key in this case. As The Verge said, the power of defaults is one of the central questions of the entire US versus Google case. Nadella being questioned, he argued that defaults are the only thing that truly matters. The very fact that Bing has market share of any kind on Windows, which is somewhere in the teens, Nadella said, as opposed to low single digits on mobile, is proof that defaults do work. More people used Bing, which helped make Bing better, which made fewer people switch. Not everyone would drop Google immediately, he said, but controlling the defaults has helped Microsoft begin to make a dent. And guess what, fellas, it hasn't only been Google who has held this opinion. DuckDuckGo's CEO said Google kills competition through phone deals that make it hard for users to switch search engines. Gabriel Weinberg, the founder of DuckDuckGo, faced questioning on Thursday, highlighting the challenges his small search engine company encountered while trying to compete with Google. Weinberg's testimony in the U.S. District Court in Washington centered on Google's contractual agreements with phone companies and equipment manufacturers that establish its search engine as the default choice on numerous devices. Weinberg explained that they hit an obstacle with Google's contracts. The U.S. Department of Justice contends that Google stifles competition by paying companies like Apple and Verizon to secure its search engine as the default option on many laptops and smartphones. In response, Google argues that it dominates the internet search market because its product surpasses competitors in quality, but despite Google's assertion that users can easily switch to rival search engines even when Google is the default, Weinberg contended that convincing users to switch from Google was intricate. He stated that the process required 30 to 50 steps to change defaults on all devices, while a streamlined process could involve just one click on each device. He said, and I quote, "The search defaults are the primary barrier," citing the complexity of the process as a significant issue. Weinberg founded DuckDuckGo in his Pennsylvania basement back in 2008 and has positioned it as a privacy-respecting search engine, promising not to track user search history or online activities. Weinberg noted that privacy concerns outweighed the desire for the best search results among users, citing internal surveys conducted by DuckDuckGo. The company still offers ads but focuses on contextual advertising, which tailors ads to the user's current search, rather than tracking their online behavior. DuckDuckGo, a privately held company, reported profitability for several years and annual revenue exceeding $100 million. While this is a significant achievement, it pales in comparison to Google's parent company, Alphabet, which generated $283 billion in revenue the previous year. Weinberg acknowledged that DuckDuckGo commands only 2.5% of U.S. search queries, underscoring the enduring dominance of Google in the search engine market. During earlier questioning, Eric Lehman, a former Google software engineer, challenged one of the key arguments put forth by the Justice Department, which was that Google's dominance is entrenched due to its extensive data collection from user clicks. Lehman suggested that machine learning has advanced rapidly, enabling computers to analyze text independently without relying on user data. In a 2018 email presented in court, Lehman expressed that companies like Microsoft, Amazon, Apple, and others could use machine learning to enhance internet searches and challenge Google's lead in the industry. In my opinion, I think he made an excellent case. Microsoft's CEO himself admitted that they were scared that Google would leverage their services to try to push users to download Chrome, forcing Apple to keep its partnership with Google in using their search engine as domain because the opposite could mean less people could potentially use Safari. These testimonies have been daggers, and Google's lawyers have really failed to make a compelling argument that the way they do business in the position they are isn't directly hampering competition. But as always, I really want to welcome in all voices and tell me what your own thoughts regarding this are. Don't be afraid to fully disagree with me, be honest to your heart and tell me what you think. Let me know if this type of topic interests you as well and if you want more of it in the future. Join my Discord if you are looking for the best day trading community, and I hope to see you all on the next one, to the moon.